It's recording. All right. Welcome everybody. Welcome to another simulation session here. Today we're gonna go over trying to get some simulation entries. Impulse entries here, and we're gonna see if we can practice what we learned last week. Um, I think going with your JPY. Yeah, let's go with your JPY. Yeah, we'll go with your JPY today. We shall see what we can get. So far, it's downloading data. Data has been downloaded. So let's do this here. I'm gonna close all my windows. All right. Okay. Let's close this, close Slack. Let's go over here. So we want 10 different dates. We want them from, let's do March 2019. When it comes to simulations, it's really important to just simulate the previous, I would say 300 days. That's about a year, right? So that's a pretty good idea to just simulate like a whole year rather than going back 3 years, 4 years, because the market dynamics are always changing, right? So you always got to be up to date with the market dynamics. So that's why we're going to go with March 2019, and we're going to go till what's the month here? November, October. Let's go to October 29th. We only want Sundays because Sundays are fun days when the market's open, and that's what we're going to get right here. All right, so we got 2020, we got June 2019. Let's do June 2019, 9th June 2019. Sounds good. It's far away, it's not that far away, it's not that early as well, so I guess that's going to be good. 9th June 2019. May is my birthday, so we're going to skip that. All right. News is also downloaded. Okay, all right, so your JPY, you go towards 9th June 2019. Currency is going to be in euro. Starting balance. Let's go with starting balance of what should we do? Let's do 3,000. Yeah, let's do 3,000. 3,000 leverage is going to be, we'll go with 500. Ooh, 8,000. Yeah, let's do 3,000. 3,000. 8,000 is way too high. History on charts is going to be 150 days back in charts. So yeah, all right, let's start the simulation here. Let's get this show on the road. So first thing we need are to load up our charts. Just got to make sure we're recording the right screen this time. Perfect. We got the 4 hour, we got the 1 hour, 30 minute, and we need the 15 minute. All right. So we load up the 15 minute, 30, 1 hour. Oh, we loaded the 1 hour, 1 hour, 4 hour, daily, weekly. All right, perfect. So what we're going to do here is we're going to get our naked charts up over here, go towards the daily. Right here. Oh, let's just mute everybody here. All right, perfect. Get this naked chart, go to 15 minute. Get this naked chart. All right, awesome, perfect. So whenever we start simulation, what we're seeing here now is we have a big gap. So let's just talk about gaps here for a little bit. I know some people are new and right. So let's talk about gaps. So this is the point. All right, let me just bring up my tools bars here for line studies. Lines, oh, channels, no, view, toolbars, line studies. So basically what happened was this is where the price closed on Friday, right? This is where the price closed on Friday. When Sunday moved around, you see price open up there, and if you just play this candle here a little bit, let's let it move a little bit. All right, perfect. So candles moving, right? So this is the gap now. On Sunday, when you come to the charts, you see a 25 pip gap. And the reason why this gap happened was because now you have to understand, right? The price of the currency, it comes from the market. The market gives the price to the broker, and then the broker, it displays the price for you, right? So broker is providing you the service to for you to see the price. Now prices are always moving because there are fundamentals that are happening all the time, so that's moving price all the time. Even during the weekends price is always moving. The only reason we can't see that because the broker is closed, and if the broker is closed we can't see where the price is. So whenever broker opens, broker contacts the market, and the market says, okay, well, this is the latest price we have for your JPY. So look, broker closed price at 122,580, and on Sunday they got the price at 122,830. So that's how they display you the price. They're like, okay, well, this is the price we got, and this is the price we're going to basically go with. So that's how gaps happen, and that's how you get these gaps over here. Okay, so what we're going to do first of all is to follow our trading plan. And the trading plan is to go towards the time when you trade in reality, right? So that's what we're going to do. So we're going to go towards the New York session here. So we can see how basically before this gap happened, we had this resistance. So price gapped above this resistance. So if it's going to come down, the only reason it's going to fill this gap is going to be if it comes below this area to come down over here. That's the only reason it's going to fill this gap. But if it doesn't, then it doesn't. So we're going to see how we go here. So see, we're coming back to this resistance turn support area. And we haven't really moved into London Open yet. The candles are moving bullish, and they continue to move bullish here, right? So that's why we didn't fill the gap, because this was a resistance here previously, and the price gapped up. It gapped above this resistance, and you can see candles came down in the Asian session, big body candles, high volume. Volume starts to die down, and as we move towards pre-London, volume starts to come in again. See, now we're coming down, but still rejecting that area. Okay, so we are moving into, all right, hold on. This is 3 a.m., 4, 5, 6. 6 a.m. Eastern, right? So we're coming into 6 a.m. Eastern right now. So we're going to take a look at the weekly candle right here first. And looking at the weekly candle, what we can see is that price is basically, this went bullish, and this is just forming, so we're not sure how this candle is going to move. So we're going to move on to the daily time frame right now. And looking at the daily, what we can see is that the daily candles, they basically closed above this resistance here, and this daily candle, it seems like it's doing like a retest to maybe continue up towards this resistance right over here at, what price is this? This is 123,400. So now we got to do is we got to look at the 4-hour time frame, and we got to see that if really it really is bullish or not. So let's take a look on the 4-hour. 4-hour basically created a resistance up over here, and if we extend this resistance all the way to the left hand side, there's probably not an area that we see. I mean, there's this another resistance up over here, which is like 14, 15 pips away. So we're not sure how strong that's going to be. So let's take a look on, so let's copy this first of all over to the 1-hour time frame. And basically what we have on the 1-hour is a range, right? Looks like we're just ranging on the 1-hour time frame. So let's move this a little bit higher right over here. There we go. Beautiful. Price is ranging at this point, and this candle is closing with no wick. So even if we continue moving up, this is going to be like a 15 pip range, 16 pip range, nothing really to see. So I mean, 30 minutes is also ranging at this point. I mean, so on the 1-hour we cannot take a buy at this point, because looking at the 30-minute, what we have is oh, where does this level come from? What we have in the 30-minute is that this candle is closing bullish, but there's this minor resistance at this point here. So I mean, even if you break above this area, it's like a 12 pip range, 13 pip range. It's like not that big. So we're probably going to wait for price to break out this range and then see where it goes from there. So yeah, it's going to be waiting here. See, if we also want this 4-hour to continue down, because the previous 4-hour was bearish, then we need price to break the support. If we don't break the support, then candle's not going anywhere. This is Monday, right? Yes, this is Monday. It says right over here, it's Monday. MON. You got the date, you got the time, right? So what we're doing is we're basically waiting for price to either break up from this area or break down from this area right over here. Usually I don't trade your JPY because like there's less volume in your JPY. That's why I don't trade your JPY. Yeah, so I guess we just have to wait over here. This candle's still forming. This candle's about to close in 30 minutes. There we go. Candle has closed. It's looking at 30 minute. It's still closing below this resistance. So there's nothing to do, nothing to see. Can't even take a impulse entry above this area because there's not enough range. There's like hardly 9, 10 pip range over there. Let's speed it up here a little bit. Let's move on towards the candle close. You took a sell after the next candle. Oh, we've done this before? Maybe. I'm not sure. Because this is ranging here. That's why. Oh, okay, okay, okay. Okay, let's do this. Let's skip your JPY, right? And let's do GJ because GJ has a lot of volume and we're gonna get our, what our motive is to get the impulse entry, like that's gonna be right. So let's do this. Let's just choose some of the dates over here. All right, get dates. All right, so we got February, we got April, we got September, 29th September, we got 25th August. What do you guys want to do? Let's do 25th August. Oh, May 2020? We got May 2020. We got April. We got 19 April 2020. All right, let's do 19th May 2020. February? Okay, 9th February. We'll do 9th February. All right. So we go with GJ. We're going to go with February. We're going to go with 9th February. All right. GJ 2017. No, we can't do that. It's too far away. 2017. Market dynamics are very, very different. So we have to stay sort of like current with the market dynamics here. All right. So GJ, GBP 3000, 9th February. All right. Awesome. Oh. Okay. Let's do this again here. We got the weekly. We got the daily. We got the 4-hour. Yeah, some charts I remember because I've had really good results on some charts. So it's really, really, really hard to forget sometimes. But sometimes I do forget. Oh, initial history was 15. Oh, my bad. Yeah, that's why I thought that why there were only 2 weekly candles. All right, perfect. We are good to go now, mates. We got the weekly, daily, got the 4-hour, 1. All right, 15-minute, 30-minute, 1-hour, 4-hour, daily, and weekly. Awesome. All right. GJ really gets the show on the road. GJ's the kind of pair that doesn't wait. GJ's like, all right, you want to party? Let's party. That's what GJ does. Gold is the wild friend of GJ. Gold is like, let's don't even sleep. Let's keep going. All right. Weekly time frame. The weekly's coming down. Oh, so let's go towards our New York session over here. Let's go towards the weekly, and we're gonna go towards New York session. This is 4 a.m., 5, 6 a.m. Eastern. So this is 6 a.m. Eastern, and this is the time when we're coming onto the chart. So looking on the weekly, first of all, we have a support forming, we have a resistance forming on the weekly time frame. So basically, we're just kind of like ranging in this 200 pip range here. So it doesn't matter because we're going to look at the small time frames there anyway. So looking at the daily here, what we're seeing is that the daily candles basically they created a resistance before they started falling down, and then they also created a support right over here. So this is a 160 pip range at this point. Let's take a look on the 4 hour. 4 hour candles are trying to move up. We had this resistance here. Let me just do some scaling over here. All right, so we got the scaling situation going on here. Awesome. Right, so look, on the 4 hour, we had a support. We also had a resistance here, which we broke. So we broke the high on the 4 hour to continue moving bullish. This was like a 20 pip move over here. And now this is retracing. Now the question is it retracing to continue moving bullish, or what is it trying to do? So let's take a look at that on the 1 hour time frame here. Looking on the 1 hour, what we see is, let me just do the scale fix here again. Now, what's the bias on the 1 hour? Just by looking at this, what's the bias? What do we see on the 1 hour time frame here? Bias. Yeah, bias is bias, but we don't see any confirmation right now, right? Because look, we had a resistance here. Price broke up this resistance, and once price broke up through this resistance, it encountered another like a resistance area right over here. So that's what we're encountering right now. So I think the best thing in this time frame would be to wait for like a minor support to be formed so that we can continue moving bullish. So let's clone this on the 30-minute time frame. Let's look at the 30-minute right now. Yeah, on the 30-minute, we'll need to see some sort of a support to be formed for price to continue up. But if we measure this range from here to here, it's like 17, 18, 20, 30 pips. Yeah, it's pretty good. It's pretty good. So perfect. So the idea is to wait for buys, and then we're gonna take a trade, and yeah, we're gonna try to have a good trade over here. So we'll have to wait for these candles. Because here's the thing, we cannot take an impulse entry above this wick because, it's not that far away. It will come down, the 30-minute candle is going to close. Let's speed it up here a little bit. All right. Oh, all right, let's speed it up a little bit more. Let's take a look on the 15-minute time frame. 15-minute is creating this scenario where if it breaks this high, it should continue moving up, but there's not enough range. There's like hardly 9, 10 pip range over there. So we can't do anything right now, right? We need some sort of a retracement to this area and then continue moving up. Because in this situation, man, it gets really hard in this situation. So we gotta be very patient here. Oh, there we go. 30-minute candle closed bullish. It went up, and yeah, it is what it is. Can't really do anything. We've basically reached a resistance at this point. So we would need for price to, same thing, like come down, create support, and then move up. This 1 hour candle is also about to close in 12 minutes over here. So we're going to wait till it closes. And it's closing with a nice bearish candle, which is pretty good. It's pretty good. So we now just gotta wait here. This 1 hour candle just closed. Let's take a look at the 1 hour candle. 1 hour candle has closed with a big rejection. Looking at the 30-minute candle, 30-minute candle is bearish. Looking at the 4 hour candle, 4 hour candle is tapping into this 4 hour rejection area. So now two things are gonna happen, right? Since this whole area here to the left hand side, this was price was consolidating before we had clean move down. If price is coming up, it could very well start consolidating here as well. So that's something we have to be very careful about at this point, because there's no buys here because 30-minute candle is bearish. There's no sells here because we're in a very tight range over here on the 1 hour time frame here as well. Yeah, so we're going to wait for a support to be formed, Because look, someone is saying it's a selling idea, but we came up to create a high. If we came up to create a high, a good idea would be to wait for price to come down to create support and take a buy for price to continue up. You have to stick to the plan. And the plan also demands you have to stick to your bias. You can't really change your biases. So this candle is about to close at this point over here. We got almost like 8 minutes left, 7 minutes left. And it's going to close in 3, 2, 1. There we go. Candle closed like this. If the next candle breaks the high, then there's not enough range, right? So it's basically stuck in a range at this point. Someone is saying enter buys. Gabriel, you really got to relax. Just stop typing for the simulation because you're going to confuse yourself. Because there's not enough range. I mean, the only thing we can get is if price breaks above this area and then starts moving up. Then we got this 24, 25 pip range. Other than that, there's nothing. Or if we can get a buying opportunity from maybe down over here, then that would make sense, right? Because look, this is the NY open right now. Now, if this is volume coming in, someone can say, oh, like, we can anticipate price to come up to this area and then break this area with momentum. The only thing about that is that that area is like 10 pips away, and if price moves 10 pips and it has to break through this area, that's a lot of work for price to do, so probably going to have to wait over here. Let's take a look on the 1 hour candle. 1 hour candle is printing that rocket ship candle to continue moving bullish. I agree with that. Looking at the 30-minute as well. I mean, if we take an entry here, right, not focusing on impulse entry. So let's just scale fix this here a little bit. Not just focusing on impulse entry. If we take an entry right here with a stop below the previous 30-minute candle, we can get price coming up towards 142, right? So that's going to be, I'm not going to take that trade, but that's going to be paper trade because we're going to focus on impulse entries here today. But price action does dictate it should tap into this high here, 142, and then kind of like reject that and come down. Let's take a look on the 15-minute here. Yeah, we're still kind of stuck in that area over there. The 4-hour candle is also coming to a close, so we'll have to wait. Wait to see what happens. Oh, see that 30-minute candle closed right at this resistance. Now, the only reason, if this 30-minute candle breaks the high of the previous 30-minute candle, then you can say, okay, you know what, price now has a high probability to continue up, and that's the point where we can start to look at some sort of impulse entry, right? If it breaks the high over there. Oh, we broke the high over there. We're gonna take an impulse entry, put the stop loss below the previous candle, which is going to be around 7 pips. Oh, better make it a little bit bigger over here. Modify, bring it down over here, so around like 9 pips over here. What about the wick to the left? There's nothing about the wick to the left because if there's volume coming in, we're taking impulse entries. This webinar is not on candle confirmations, it's on impulse entries. And whenever you get impulse entries, you're expecting volume to continue price. If you're worried about wicks or this and that, you got to go watch the basic webinars first, because impulse entries are entries taken when you're expecting price to continue moving bullish. Right now, if for some reason it starts coming down, so we got to look at the 15-minute time frame now, right? Now on the 15-minute, if a 15-minute candle closes bearish, that's going to be the point to maybe cut some of the position short, right? So we can see here the candle's coming down bearish. We're about 2 minutes left into this 15-minute candle closing at this point. So what I'm going to do is at this point I'm going to close out partial positions. I'm going to close out 50%, and yeah, that's about it. Just reducing my risk at this point. See, that's the 15-minute candle closed bearish. We closed out 50%, right? The 30-minute candle is still open. The only reason, because otherwise the buying at the, are we taking this because of NY volume? Yes. If you look at the time, this is NY volume. So again, listen guys, this is an advanced webinar. If you have basic questions like volume or when, you have to go watch the basic webinars first. So please don't ask any questions here about basic stuff because this is not a basic webinar. Okay. All right, so look, this 15-minute candle is about to break this low, and as it's about to break the low over here, probably not a good idea to stay in this trade. So probably going to close this trade out. And that's it. Oh, wow, look at that. It broke the low over there, right? So even though we took an impulse entry when the candle broke the high over here, anticipating it to continue moving bullish, these are trades that we've taken this past week, and for the most part, they've worked because you have clean candles here to the left. But maybe, like, the rejection on the 4 hour was too much, so that's why the candle is rejecting over here. So, we took one trade, managed the risk. Managing risk was the key over here. So perfect. Let's move on to the next New York session here, and let's see what we can get over there. Oh, wow. So we're just ranging at this point here. So we put the stop loss below the current candle. Yes. All right. So let's go towards next New York session. This is 3 a.m. London Open, 4, 5, 6. 6 a.m. Eastern, we are walking into right now. All right, so let's take a look on the weekly here. Weekly is also ranging, whatever, it's in this big ass range. Daily candle is also jumping from a support. This daily candle is breaking the high, and we're not sure if it's going to continue moving up or it's going to come down. We're not sure about that. So what we're going to do is we're going to look at the 4-hour time frame. Looking at the 4-hour, seems like the 4-hour candles broke above this rejection area, and we're now continuing up. But at the same time, since we're moving up, we're also moving into this rejection area at this point as well. So if we want this 4-hour candle to continue bullish, right? If the idea is that this 4-hour candle is going to continue bullish, then we're also looking at the fact that, okay, maybe on the 1-hour time frame, we should continue moving bullish at this point over here as well. So at this point, I guess we'll have to wait to see how the next candles form, because ideally what's happening here is that price came up to create a high, right? We've made a high. Price is basically down at this point, kind of like trying to do a retest. I mean, wherever we're going to do a retest. If we do a retest at this point, well and good, but I guess we should be continuing moving bullish. So let's take a look on the 30-minute right now, and let's see if we can find more information. Looking at the 30-minute candle, 30-minute candle is closing bullish, right? If the 30-minute candle is closing bullish, this means there's a higher probability for the next candle to continue moving up. But looking at the 15 minutes also bullish, 1-hour candle is bearish, 30 minutes is bullish. So I guess, yeah, this could be a pretty good trade here. This could be like a 8-pip stop. We can risk 1%. We can take a buy over here and anticipate the next candle to continue moving bullish. Actually, you know what we're going to do? We're not going to do this. And instead, what we're going to do is we're going to focus on what our focus is here, impulse entries. Keep forgetting. All right. So, oh, wow. Good thing. Good thing closed it. So we're focusing on impulse entries, right? I mean, impulse entry would have been taken if this candle broke the high right here for price to go up. So that's only what we're focusing on here today. Wow, man, that thing came down fast. Damn, Daniel, what's going on over here? Yeah, see, now this candle has to close. If it closes back in this range, then we're coming down to this support area right over here. Wow, that was super fast. Didn't really expect it to move this quick. So yeah, this candle is about to close. 30-minute candle closed at this point. Looking at the 1-hour time frame, 1-hour candle is now looking at the 15-minute. Okay, now take a look at this, right? Someone can turn around and say, okay, like, you know what, on the 15-minute time frame, we're breaking this area, we broke the support, came down, candle is bullish, so maybe want to wait for a retest at this point and then take a sell. We cannot take a sell based on a 30-minute if the 1-hour candle is still open like this, right? We're going to take a sell on 30-minute if we start breaking the low over here for price to continue down. But if we don't break this low, there's nothing happening. Also, the 15-minute candles are here bullish, so there's no trade at this point. 1-hour candle is still open, so we're not sure whether this 1-hour candle is going to close below the range or above the range. So we're kind of like waiting at this point. All right, let's take a look on the 30-minute time frame. 30-minute has this minor resistance at this point. We really want this candle to close. We want this 30-minute candle to close so we can take some sort of an action at that point. You haven't checked for London news. Yeah, I don't normally check for London news either way while I'm in the New York session. All right, the 30-minute candle closed. We closed at this minor resistance at this point. Looking at the 1 hour closed like a big doji. So this means that nothing happened within that hour. Looking on the 4 hour still open here. 1 hour kind of did like a fake out to the downside. 30-minute also did kind of like a fake out. So this is how fake outs work. So let's take a look at this here. We had a high made right over here, right? And then we had a support made right over here with this candle closing bullish. This candle broke support. This candle had to do a retest to continue down, but instead this candle closed back in the range. So if this candle is closing back in the range, theoretically speaking, technically speaking, this candle should respect the previous candle's low and then continue moving bullish. That's what should happen. But we're focusing on impulse entries, so that's what we're going to focus on, and we're going to wait for candles to form in a way that we can say, okay, like, you know what, this seems like a good idea for an impulse entry. So we're just going to wait at that point. Oh, perfect. See, we're breaking the high at this point. Once we're breaking the high, I think this is an area where we can take a buy over here. So it's going to be a 10 pip stop. We're going to do a 10 pip stop. We're going to take a buy position. Probably going to bring this a little bit lower right over here, right around 11 pips. So if we're breaking the high, we should continue moving bullish at this point here. All right, let's take a look here. We're still struggling. This candle is about to close in 10 minutes. We're moving bullish, which is pretty good. I faced a loss in a trade. Consider the 5-minute. Yeah, 5 minutes pretty tricky. So look, the 30-minute candle closed bullish. The 15-minute candle closed bearish, and it's coming back down to my entry. This is the point where I want to close 50% of my position, because even though the 30-minute candle is open and the 1 hour candle is about to close bullish, what we want this 15-minute candle to print in our direction, right? That's the main problem over here. So it's coming down to my entry here. So I'm going to close 50% because I wanted this candle to close bullish. I mean, if we can get next candles to break this minor resistance here, then we can add another, add the percentage we took off, and then price can continue to go on further. Now look, see, price came down, it broke the low, and it just continued down. So it was a pretty good idea to kind of like take a risk off, and this candle is about to close here as well. So see, this candle is closing below this area. I mean, this 30-minute candle is about to close bearish, so going to close another 50% at this point. So really mitigating risk over here. Really mitigating risk. No hoping, no kind of like saying, oh, what if it does this or does that. See that the 30-minute candle closed bearish. It closed bearish, creating like a resistance at this point, right? So the only reason next candle is going to continue moving up if we start breaking these highs here to continue moving up, right? But right now there's nothing happening at this point until we don't break that high. Once we break that high, then we can take a buy. But if we don't break that high, then we ain't going nowhere, son. Look at that. Look at this candle. Does it make sense to be in this trade? Does it? I don't think so. It does not make any sense to be in this trade. So we're going to close this trade. So see, our daily risk is 2%. We're down 1.32%. So yeah, I mean, now we just kind of like look at this 1 hour range over here. We're just ranging at this point. There's nothing to do. We're just ranging at this point here. What will be a suggestion to understand the concept and implement it in a good? What are the measure? I'm not sure what you're talking about. What concept? I think you need to watch the presentation webinar on impulse entries in the database. It's called Impulse Entries 2.0. You need to watch that first, and then you need to come to watch this simulation. All right, so the 30-minute candle is about to close here. The 30-minute candle just closed. Looking at the 30-minute time frame, man, it's a mess. Yeah, it's a big mess over here. The 30-minute time frame. All we got to do is break the high to continue moving up, or we got to start breaking the lows to continue moving down. I think maybe start breaking these lows over here. Let's remove this here. Yeah, because in the 1 hour time frame, we're still ranging over here. This is a dirty price action. Isn't breaking below on the 1 hour time frame, isn't breaking above on the 30-minute time frame. The 4 hour candles are still kind of like stuck at this point. So yeah, not good, not good. Probably we try to break above. Just got to see how big the stop's going to be. 15, 16 pips, not bad. So let's let's take this into account, right? It's been about 2 hours, and there hasn't been any volume. So we look here. We came through charts. This was your London open. We had a lot of volume. We moved into pre-NY, no volume. We moved into NY session, no volume in NY session. And now slowly we're moving into NYC open. So we had three situations where there was no volume. We had pre-London, no volume, no, pre-New York, New York open, no volume. Oh, sorry, now we're moving into the third situation where there should be volume. And I think if we can break the previous highs, we can get a nice trade coming in. Let's take a look at this on the 1 hour time frame. Right. So here we have the 1 hour time frame right over here. So basically 1 hour time frame went up, created a high. This candle closed bearish. We're rejecting this resistance as well. I think if we can break the highs over here on the 1 hour time frame, we can not only get a wick fill here, but maybe we can get price coming up to 142, 300 here as well. But if we break below, then obviously we can come down to this point here at 141, 750. 4 hour candle also closed bearish, so we'll have to wait at this point. 1 hour candle is moving. Oh, it moved way too fast. If it was slower, we would have gotten it. But this was the buy right over here. Buy is executed right over here, stop below the previous candle, and anticipating price to continue on now. Man, that just moved way too fast. Yeah, it just moved way too fast. I mean, we could go back and enter the entry, but the idea was there, so now it should continue moving bullish at this point. Fill the wicks, yeah, it's going to fill the wick here at 142, 200, and then continue on to this area, which is like 17, 18 pips away, 142, 280. So it should continue up because we've broken the high here, and I mean, it's just going to continue moving bullish at this point. Let's see. I'm trying to see if I can still get an entry here just for the sake of this simulation. If it retraces a little bit more, but it won't. You basically missed it. So this would have been the stop down over here, around 10 pip stops, and then eventually, like securing positions at 10, 11 pips and letting it run if it's going to continue running. That's like 300. That's going to be a good target there. 15-minute candle also closed. 30-minute candle also broke above the highs. Man, this would have been beautiful. Beautiful running bullish. Yep, 930 is going to roll around and it's going to continue pushing even more. Yeah, it just moved way too fast. Next time I'm going to put a buy stop here so it doesn't move too fast. If this was live market, would have caught it because, time won't go by too fast. Oh, wow, look at that. Came all the way up there. So basically that was a trade and missed the trade basically. So let's go towards the next New York session. So the idea was right. The whole point is that we understand the idea behind impulse entries, right? Price was ranging. There was nothing happening. We had this resistance formed. Candles didn't break the high, came down. I mean, we consolidated during pre-NY, consolidating during NY session. We moved into NYC open, and as you broke the high, the idea was to take a buy as you broke the highs over here, stops below this current candle, and yeah, eventually that was a good trade. All right, let's see if we can get a trade on Wednesday here. Oh wow, look at that. Came straight up and then rejected that area down. So this is the point where there's no trading because there's less volume at this time, so we're going to move on towards the next session here. Oh, we're still ranging. So this is London Open, 3 a.m., 4, 5, 6. Holy, 6 a.m. Eastern at this point. Price just went bananas. All right, let's take a look at the weekly here. Weekly still moving bullish, ranging. Daily candle has reached this daily resistance at this point. Let's take a look at the 4-hour time frame. Looking at the 4-hour time frame, what we have here is that candles are moving bullish. At the same time, they're approaching some sort of a resistance area over here as well, right? So if we're approaching some sort of a resistance area, this means there should be some sort of a rejection from this point, because this is a 4-hour resistance and this is a very, very strong resistance. So what we're going to do is we're going to go down to 1-hour time frame and kind of like extrapolate some sort of an idea from this area. See this? If we're coming into this resistance, this should get respected. If you can copy this over to the 30-minute time frame, and let's move on to a 30-minute time frame. What we see is that price is essentially at this high over here, and at the same time it formed a support at this point. I think if we can break below the support, we can get a move coming down and we can get a correction up from this move. Kind of like the trades we've been taking, like, this past week. So probably gonna wait at this time and probably just gonna wait to see how we go about this area. Let's just zoom in over here and yeah, let's see if we break below or we break above or what happens. Because if we do break below this area, then we're going to continue moving down. So that's something I want to get, because this is a support at this point here. Counter trend impulse trade, yes, because we've reached a resistance and we've made a support. If we break the support, we go down, right? Ooh, look at that. These candles are trying to break above this. This is the mistake people made this week, right? Because look, candles are moving up. If we start moving up from here, this is a 7 to 8 pip range. So taking an impulse entry here, it wouldn't be it wouldn't be a good idea, because like previously we had candles move up and leave wicks, move up, leave wicks, move up, leave wicks, and the clean range is way too far away, right? So you would need a candle to close above this area. This is a differentiation between taking an impulse entry and waiting. At this time, we have wicks here to the left hand side and no candle is closing above this area. So it's better to wait for a candle to close above this area and then with confirmation go up. The only difference with sells is that we have this range which is very close to the price action. If you get a candle breaking the low at this point, then you could say impulse entries are going to work because the clean range is right next to it. At this point, the clean range is way too far away. It's way too far away, right? So that's a concept I've been looking at this week. So that's why I'm not going to be focusing on impulse entries for buys. Going to wait for price to basically close above. So yeah, this what's this? I believe if we respect support, we can continue. Yeah, I mean, if we close above resistance, then we can continue. I mean, we can respect support and still stay below resistance. All right, so the 1-hour candle closed. Look at the 1-hour candle. 1-hour candle closed like a bullish candle at this point. Cannot take a buy because there's resistance here, and 1-hour candle basically closed below these two candles here to the left hand side. So we gotta wait at this point. Man, this week is turning out to be pretty difficult. Let's look at the 1-hour candle, 30-minute candle right here. Yeah, we're just waiting at this point. Ooh, we're breaking below. Was this the trade? Was this the move on the 1-hour time frame? Probably. It was way too risky because we got this wick rejection here to the left hand side. There's a lot of volume at this time. What's going on here? We had news? We didn't have any news at this time. We have news at 8:30. All right, so 30-minute candle closed above that support. There's nothing happening at this point. We're rejecting. Yeah, a lot of discipline here. Can't take a buy because we're under resistance. Can't take a sell because we're above support. I mean, it's a big mess at this point. So we're waiting. We're trying to break above. See, now this candle has to close above to take buys. If it doesn't close above, then there's no trade at that point. It needs to close above this area to take a buy. But we are not closing above. Because look, how many candles came up in the left wicks, right? Like a lot of candles. So we need one candle to close above that area. All right, so new 30-minute candle is about to start. And as the new 30-minute candle starts, and as we start breaking the low, I think over here we could get a move down to probably correct this whole wick down to that point. See this? We're breaking the lows at this point where there's volume in this time. So we haven't really broken from London Open, right? So look, London Open happened, price range, pre-New York, New York. Now we're moving into New York Open. So I think it should continue moving down. Let's do a sell here. And what we're going to do is, all right, so we're going to measure the stop loss. Stop is going to be around 8 pips. So we're going to do an 8 pip stop. We're going to take a sell, 1% risk, aiming for price to continue bearish to fill those wicks to the left hand side. Candle still moving here. We're kind of like retracing back in the range. Don't want to get stopped over here because we're coming down. This candle is about to close. 15-minute candle also closed, closing bearish. 1-hour candle has also coming down. So I think this 1-hour candle should continue down to fill this wick over here. So we're going to keep an eye on that. It's a very, very messy price action. Almost seems like trying to force this trade here. You're going to put stops at break even. Not really sure whether it's going to continue or it's going to retrace or what. We're at 6 pips, 7 pips. Okay, candle close right down over here. Going to close partial positions here. Actually, going to close majority of my position, close 90%, and then let the rest run. And if it, okay, we got 13, 14 pips at this point. All right, close the whole thing. But this was very difficult, extremely difficult. You know, because waited a long time for price to move, and price moved. And let's take a look on the 4-hour. 4-hour also continued to move down. So this is the start of the new 4-hour candle here as well. Yeah, trying to do a retest, maybe for price to continue down, but we'll see. Because if it's doing a retest, then it should continue moving bearish. Let's take a look on the 15-minute time frame. Still coming down. 30 minutes also rejecting that. No criteria of entry. Messy price action. Day has ended. It's 10 a.m. Just took one trade, and it is what it is. Let's go towards. Oh wow! See, nothing came down. Just went back in the range. So we're gonna go towards the next New York session right now. So this is 3 a.m., 4 a.m., 5 a.m., 6 a.m. So now we're moving back into 6 a.m. Eastern. So coming into 6 a.m. Eastern, I mean, this week has been pretty messy. It took like what? Didn't took many trades here. Let's take a look here. It took like 2 trades, 1 partial close, second one minor profits. So nothing much that happened this week here so far. So let's take a look on the daily here. Daily still below that resistance. Nothing really to see here in the daily time frame. Looking on the 4-hour, what we want to do is we want to remove all these zones on the 4-hour, and we want to draw some new zones here, kind of like fresh zones at this point. So what we're going to do is we're going to draw a support. We're going to draw a resistance up over here on the 4-hour time frame, because obviously, you know, 4-hour has a support and resistance. Going to the 1-hour time frame, and what we have on the 1-hour is that we're creating a resistance at this point right here, and we also have a support formed right down over here at this point. So at this point, we're just kind of like waiting to see where and how price will move, right? So the basic idea is that if it's bullish, we need to break above this resistance for price to continue moving up. And how far will it move up? Let's measure this range. I mean, it could move up into this rejection wicks over here around 142,600, 142,630. So yeah, I guess we'll just wait here for price to kind of like break above or break below. That's all we can do at this point. This week is one of those account blowing weeks. Yes. That's absolutely correct. Because here's the thing, right? If the 4-hour is forming support, and if it's respecting support, then shouldn't 4-hour candle continue up to retest this high at 142,800? It's like a 50, 60 pip range, right? But we have some sort of a rejection here, so it might also come up over here. But if you look down to the smaller time frames, it kind of seems like we want price to break above this area and then continue moving bullish. So far we've had one winning analysis, and yeah, here we're just waiting now. I mean, that's all we can do. We can just wait at this point. Let's look at the 30-minute time frame. 30 minutes also at that resistance area. We also have the support area. Man, this is tough. Waiting and waiting and waiting. This is super, super tough. So we got this 1 hour candle closing. Oh, wow. Look at that. Came all the way down. Came all the way down and now retracing all the way up from support. Damn. This is where people take sells, you know? Price moves down to support really quick and they take sells. Why you move stop after the 15-minute close? Because the 15-minute wasn't closing in our direction. That's why we moved to stop. Would you put a buy stop above the resistance? Yes. So you gotta wait how this candle closes here. This candle is about to close in 3, 2, 1. Candle closed now, right? So we closed here. We have a 30-minute candle also closing below that area. We have a 15-minute candle also closing below that area. Let's take a look on the 4-hour. 4-hour also there. I guess on the 4-hour, if the 4-hour candle is respecting the low over here, and if it does break the high, it should create a higher high, right? So I think that's going to be a good point to take a buy stop. Maybe, what, like 7 pips away? Because I really don't want to miss it if we break this high, you know. So that's why 7 pips away. How much is it going to be? 7? Yeah, 7 pips away. So let's do 7 pips away. We're going to do a buy stop. We'll go with our regular risk here, 2%. Stop loss. Stop loss, we're going to do... See, normally I don't put a stop loss. I monitor it. So what I'm going to do is in the start, we're going to go with a 10 pip stop over here. Oh, buy stop. Yeah, buy stop is above that area. So yeah, if we go above there, if we break the previous candle's high, I think we should continue. Oh, trade got activated. Trade got activated, and the stop loss is below this current candle now because we're breaking the high above the previous candle, so the stop loss is going to be below this current candle now, and we're going to monitor this trade based on risk management on the 15-minute time frame, right? So now listen, you're entering based on the 30-minute confirmations, 1 hour confirmations, but we're managing risk based on the 15-minute time frames. Right, let's take a look at the 30-minute here again. Oh, beautiful. Moving up. Oh, nice. Moving up 13, 14 pips at this point. Going to secure positions here. Close partials. Close 90% at this point here. Close 90%. Put stops at break even. And that's it. High five. Very nice. Wawa. We've reached the target. Going to close another great success. Close another 50% and leave the rest run, and that's about it. So look, Monday no trade, Tuesday missed the trade, Wednesday no trade. I mean, just shit trade here for a sell, and Thursday, boom, volume came in and we got this trade on Thursday. Right? So one trade, man, one trade changed everything. One trade changed everything. So there was no confirmation. There was just impulse entry. And oh, wow, man, this thing is still running at this point. 34 pips, 35 pips on 4-cent lots. Probably going to close this right over here. And we're going to move on to the next session at this point, which is going to be the Friday, right? So, oh, wow, this thing kept going over here. Damn, look at that. It went up 45 more pips after we closed. Crazy. Oh, wow. Still moving up. Damn, Daniel. Look at that range. So this is, we're going to move into our London session at this point. This is 3 a.m., 4, 5, 6. 6 a.m. Eastern. And when we come to the charts, we see that price is just ranging here. So let's take a look on the daily. Daily is whatever daily broke above this area. Looks like this daily can continue up, but we're ranging. So we're going to go to the 4-hour time frame. Looking at the 4-hour, we basically created a resistance up over here. And this 4-hour candle is trying to come down to maybe create some sort of a support to move up or whatever it's trying to do. So we're going to take a look on the 30-minute time frame, on the 1-hour time frame, to see what more information we can find. So looking at the 1-hour, we basically have a resistance forming up over here, which makes sense. We also had some sort of a rejection here, right? So look, price came up, formed support, continued to move up. Now, this candle came down. And as this candle came down, it also broke below this support area right over here. So if we're breaking below the support area, this means that there's a higher probability for price to maybe, do a retest and continue moving bearish. So that's something that we're going to look at over here on the 30-minute time frame. Let's just clone this over to the 30-minute and let's go over here. All right. Perfect. So we got the 30-minute, and 30 minutes just kind of like fugazi over here because we got a resistance here, we got another resistance broken down. So I guess if we can see some sort of like a minor resistance forming, we can take a sell for price to continue down. So we're gonna wait and see. And I guess that move down could be like a retracement of this move up, which we've seen like a lot lately as well. So let's see how that plays out. So we're coming back up to this area here. So now this is a no trade zone here, right? This is no trade zone here. This is like 18 pip range, 19 pip range. It's like a no trade zone here. So perfect. So see this candle here is trying to break the low. And as it's trying to break the low, I think there's a higher probability now for price to continue moving down, because we're breaking this low on the 30-minute time frame. We broke the low. If we come back down again, I'm going to take a sell over here. See this? We're breaking the low here. This is a great opportunity to take a sell. Impulse trade for price to come down to fill this wick and to fill this wick, and then eventually to come down towards this area right over here. This is the trade I took on Thursday. Like price came down one wick, second wick, and continue on further down. No, I think this was a Friday. This was like a paper trade I took on Friday. So it's going to be like a 9 pip stop over here. We're going to go with 1% risk. Oh, let's go towards trades and let's take a look at this here. Oh, wow. So after you take an impulse entry, going in drawdown is very, very normal. Right? All you got to focus on is the 15-minute candles if they don't start closing against you. If the 15-minute candles just start closing against you, then that's not a good trade to be in. So if you see this candle is about to close, there we go. 30-minute candle closed bearish. If you look on the 1-hour time frame, 1-hour candle is also closing bearish. So now the trend is bearish, right? There should be no confusion what the trend is because we're trying to move down. And if we're trying to move down, next candle should continue moving bearish. Would you take a normal trade here? No, I wouldn't take a normal trade here. Maybe after we break the low on the 30-minute at this point. But right over here we are, probably not. So we're moving in profits, moving in drawdown, came down here but we're rejecting this area, probably going to close 50% at this point because trade didn't plan out in the time frame I expected it to play out. So that's why just being a little cautious at this point, right? Because if this candle closes back, now here's the thing, right? I've closed partial positions, right? I've closed partial positions. Now, since I've closed partial positions, this does not mean that I'm going to close the entire position. I'm going to let this trade stop me out here if it's going to continue up to stop me out. Because the worst thing I want to see is that, for price to go in my favor after getting stopped out. That's the worst thing I wanted to see. All right, this candle is coming to a close here. We're creating a support on the 30-minute time frame. We got stopped out of our sell, and now we're going to see if we can get a trade, give our trade a second chance if we start coming down. So this is the New York Open time frame right now. And in New York Open, if we can continue down, I think that's going to be a pretty good move. But what I want to see is where will our entry be? Can I take an entry on a 30-minute? Oh, wow, 30-minute is moving fast. Maybe after we break the low on the 1 hour time frame. Because if we're breaking the low here, this should continue moving down, but there's not enough range at this point. It's like 8 pip range. It gets a little messy over here. But it's GJ, man. This GJ can continue moving. That's the thing. Pretty interesting. Made a minor resistance, broke the low, and continued down. Now, 20 pips. Now, one important thing to understand during the impulse entries webinar is that there will like the impulse entries, you will not get them every day. You might get them once a week, twice a week. So it takes a long time to master impulse entries, because when you're looking at the live market, you're basically waiting for the next time impulse entry is going to happen. If it happens like, twice a week, maybe now you have to wait 4 or 5 days for the next time it happens. But if you're looking at market entries would have been pretty good after this candle closed bearish on the 30-minute time frame, and we could have anticipated the volume coming in to break this area to continue down, even though the 4-hour candle was also bearish at this point. So, all right, let's go towards the next session. I know mostly we end the days on Fridays here, so we're going to go on to the next day here. Yeah, we're going to move on to the next day over here. So let's go towards, this is 3 a.m., 4, 5, 6. 6 a.m. Eastern that we're moving into right now. And I think this is going to be the last trade that we're going to try to focus on here. What we have here on the daily is obviously bullish at this time. We're looking at the 4-hour. 4-hour is also rejecting this resistance at this time. Right here. Oh. Man, this piece of shit MetaTrader. Okay. We're rejecting resistance on the 4-hour. Let's go down to the 1-hour time frame. 1-hour time frames are also ranging at this time right over here. We're ranging, so we'll need to see a break below this area for price to continue moving bearish. So I guess we'll have to wait to see how price moves, and then we're going to be able to make some good decisions here. Oh, there we go. We're breaking the low at this point. Since we're breaking the low, this now means we have clean traffic here to the left-hand side, right? We're breaking the low, impulse entries, like 8, 9 pip stop, sell, and let it play, and should continue down to fill the wick. Once it fills the wick, oh, there we go, 10, 11 pips, close partial positions, close 90%, and yeah, let the rest run. Put stops at break even. So if this now gets stopped out, it gets stopped out, but if it continues running, then it basically continues running. So the whole idea was once we broke the low, it should continue down to basically fill this wick at this point here, which we did fill this wick over here, which was like 15 some pips away. Yeah, it worked out very nice. Pretty happy with this. All right, let's move on to the next day here, and let's leave this current trade running over here. Ooh, we're moving on. There's no volume. All right. Half risk because it was Monday? Yes. Yes. So look at this, right? Look at this candle right over here. Once this candle is closing bearish, notice how it's closing below these minor supports here as well. If it's closing below these minor supports, there's a very high probability this next candle is going to continue moving bearish, right? Just watch it happen. It's gonna, let's move on to the next bar. Oh yes, it did continue moving bearish. So we're gonna close this trade right over here. Oh wow, we can, oh damn, Daniel, Asian open candle went cuckoos all the way down. Starting to realize it's not about the money, it's all about risk management when you're in a trade. Yes, exactly. It's all about risk management while we're in the trade. And if you look to the left-hand side, we're coming down to correct this whole move up as well. So we've seen this happen a lot of times as well in the live market. So all right, let's go towards our, so this is 3 a.m., 4, 5, 6. Oh wow, man. 6 a.m. Eastern. These are the days when I come to the charts and I see London making big moves, and I'm like, man, now what are we going to do? How are we going to tackle the situation now? This is going to be the last trade we're going to take in the simulation here. So weekly candle is still ranging here. There's nothing to do, nothing to see. Looking at the daily time frame, daily is also in a mess. We're not sure if this daily candle is going to continue moving up or will it continue moving down. So we got to refer to our 4-hour time frame. Looking at the 4-hour, what we do have is that we had a resistance formed on the 4-hour, and once price came up to this resistance, like look, price came down, created minor resistance, and then dropped. This new 4-hour is coming up to the same area, and it seems like it's kind of like rejecting this area. So we're going to go down to the 1-hour time frame, and what we see is that this 1-hour candle closed below the support which we made previously at this point. So I think at this point, we really have to wait to see if we continue to go up and create resistance to continue moving bullish, or do we start rejecting this area to continue moving down? So let's take a look on the 30-minute time frame at this point, and let's see what more information we can find. Looking at the 30-minute time frame, we have are we closing above this area? Because let's take a look at this, right? If we take a look at this candle here, this candle closed with no wick at the bottom. So now I'm going to take this chance, right? I'm going to take this risky chance. And this risky chance is going to be, since we had a lot of volume come in, let's take a look at this. There was any news. There was no news here. So since we had all this volume come in and candle is closing with no wick at the bottom, also this candle, it opened and closed above this previous support area, which was held in New York session, right? So this is really important. If you look at the time at the bottom, it says 1600 hours, right? 1600 hours is 9 a.m. Eastern. So 9 a.m. Eastern is a very high volume session. And if price created support and you have a candle closing here with no wick at the bottom, this could mean that price could continue moving bullish. So that's what we're going to do, right? I'm going to take a smaller risk over here. How much is this stop loss here? It's like a 4-pip stop. I'm going to put a 4-pip stop, take a buy. Actually, going to now move the stop a little bit lower because it's at this candle. You know, move it a little bit below the candle, also leaving some room for the spread. And if we do continue bullish, I think this idea should play out. Because if this candle closed with no wick at the bottom, this means there was no range for price to go down. But if this candle breaks the low over here, then we're coming down, right? But so far, I took this risky trade. I lowered the risk over here. We got a potential wick fill over there. Price is in profits. Going to put stops at break even here because don't want to take a loss. We're moving up 8 pips, 9 pips, 7 pips, 10 pips. Just gonna close partial positions over here. Close 90%. We're moving up at this point. Now, obviously, someone basically missed this trade. So what we're going to do is basically, we're going to wait to see if we can form some sort of a support and then continue moving up. Yeah, I think that could be a pretty good trade here. Oh, wow. Oh, damn. Look at that. Kept moving. Yeah, 1-hour candle also closed above. So I think risky but lovely trade. Yes, it was a risky trade. That's why I reduced the lot size here. Okay, so we're going to see here. So what we want to see is for price to create some sort of a support and then continue up. Or if we can break this high on the 30-minute time frame and then continue up further more. But there's this rejection over here as well. Just wait. Gotta wait for the 1 hour. Look at the 30-minute. It's retracing. If it comes down, another 30-minute candle closing bearish, high probability to come down. And it's good if it comes down, because if it's come down, then there's an opportunity for price to create some sort of a support. And if it fills support, then we can continue moving up. Oh, wow, look at that. Looks like, oh, our entry got stopped out at that point. All right, this candle is about to close. 30-minute candle is about to close. 30-minute candle closed. 1 hour candle is still open. This 30-minute candle has formed a resistance at this point. So we're in an uptrend, made a high. We need to see some sort of a support forming for price to continue moving bullish. Man, this sim is a pretty messy sim over here. We have to move on to the next week to look for some examples. All right, candles coming down. We got to form some sort of support for price to continue up because we're in an uptrend. All right, look at that. Let's speed it up here a little bit. Candles coming to close. 3, 2, 1. All right, there we go. Let's take a look on the 4-hour time frame. No, daily. 4-hour is still bullish. It's closing below this area, but we're still in a very, very, very heavy uptrend. Looking on the 1-hour, 1-hour is coming down to this range support area. If we form a support, man, we're moving up. On the 30-minute, we just need to see some sort of a confirmation of support on the 30-minute time frame. So 30-minute is doing its dance at this point. Yeah. So we'll see here. Oh, we're moving up here. Let's take a look on the 15-minute. 15-minute is also moving up here, but it's got this resistance at this point. Are we going to move above with volume? If we break this high on the 1-hour, the stop is going to be way too big, but the TP is also up over here. So let's see. Oh, wow, we're coming dangerously close to break the high on the 1-hour time frame. Oh, we broke the high on the 1-hour candle right here. Let's take a look on the 30-minute. 30 minutes also breaking the high. 15 minutes also breaking the high. 4-hour candles also coming up to fill this wick. Oh, brother. What should we do here? Should I take a buy at this point? Let's do with the... But the stop loss is the problem. How big is the stop loss going to be? It's going to be like a 12, 13 pip stop based on the 15-minute time frame. 15 pip stop loss, 14 pip stop. Yeah, that makes sense. On the 1-hour is going to be bigger though. So yeah, let's go with the 12 pip stop, because if I go with the 12 pip stop, not really anticipating candle to come all the way down over here, really anticipating it to continue moving bullish. That's the whole idea. I mean, if it's breaking the high, I mean, it should continue moving up, right? Going to put stops at break even at this point because don't want it to come back and draw down. Oh, got stopped out. Let's take a look on the 15-minute. I'm going to see if we can give this trade a second chance. And if this is going to be the last trade, we're going to put in some expertise over here. And for expertise, we need the 5-minute time frame. All right, let's take a look at this 5-minute time frame here. Some expert level analysis now. We're moving into the expert situation here. Expert is the curving situation. All right. Oh, 5-minute candles are moving way too fast. Way too fast. So what's the probability it's going to go up? I think it's a very high probability it's going to go up. So we're going to re-enter at this point, and we're going to anticipate it to continue moving bullish. Ooh, 5 minutes forming, broke the high. 5 minutes breaking the high at this point. Oh, 5 minutes retracing. New 5-minute candle formed. We're coming down. 30-minute candle is also bullish. 5-minute candle has formed bullish. We're breaking the high over here. Let's look at the 15-minute as well, 5-minute as well. We're breaking the highs over here at this point. Yeah, this should now continue moving bullish. These are curving trades where price just continues moving bullish. Let's look at the trade here. We're at 3 pip profit. Oh, we're coming back in the range. Close 50%. I guess that's it for today. We tried impulse entries, simulations. I mean, at the end of the day, you're not going to get them every day, right? It's going to happen like once a week, twice a week. You know, that's about it. So you, at the same time, you have to be very careful with impulse entries as well. So I guess we finished the last week with 2.3%. And this week, I don't know, we just took one trade over here. So awesome. Thank you for everyone that came in. What's going to happen is this webinar is going to be in the database in about 3 to 4 hours. We're going to wait for it to render here a little bit. If someone is confused, I would say go to the database and look at the impulse entry presentation that we did. It's in the advanced technical concept, so you can look at that. But have a great weekend, everybody, and we will see you Monday morning. Take care.